Trend bar alert. Trend bar alert. Look at opening a trade.
Recording in progress.
Good morning, traders. This is Rose with Bullish Bears team. Today is Thursday, February 3rd. It's 9:21 a.m. Eastern Time. This session is recorded. Just doing a quick audio and video check. Hello. Okay. Very good. Okay, so look what's happening. All right, so we have Globex high and a Globex low. So these swing levels we need to pay attention today. It's rather a tight range. So we're definitely going to break out of it, obviously. I need to fix these. I don't no longer need that one. All right, this is going back. Oh. This one I might need, but let's see. I see why I didn't need that one. All right, I'll leave it alone. But this one, we're gonna need it. Okay. This one already filled its purpose, so that's gone. All right, so what do we got here? So I did say yesterday it looked like some kind of a distribution, but we came down a little bit to this. Can you see this area of interest on the 30-minute chart? So we're there now, and it's actually a demand zone, and it's got to be a lot more visible on the 1 hour. On the 1 hour yesterday, we had a little bit of fake out, but eventually we did that double top that I've been looking for the fifth wave. Needed a double top. Look where it is, right at the trap zone of the 1 hour extended balance zone, and that generally is a swing setup. So we did not sell this Wolfie wave, although it looked very convincing. But I warned you guys yesterday that please wait for that hour to close bearish. And this applies to every single time frame. It just doesn't matter which one you're using. Price action is price action. So this right here was beautiful, but it was the end of the day. And because we have this right now, we could be bearish. Like today could be a bearish day. Okay. If you look at the 5-minute chart, that end of day selling pretty intense. So that could reflect today and tomorrow. Like closing this week, maybe bearish. I don't know, but we'll see. So that swing closed outside and claimed the first shallow target, and then went right back up and just came right back down. Okay. Okay, hang on. All right, so here you go. It comes down to the target. However, we did close below it, so we're closer to this level now. We could end up coming down to this level now. Okay. These are shifted a little bit, so I'm gonna put it there. That's wave 2. Okay. We could end up coming all the way down here if we have a bearish day today. So I'm gonna leave it like this to keep an eye. 2-minute chart, we have violated this low. Okay, it's kind of important. Okay. But I'm more interested in the Globex low at the moment because we are way too close to it. All right, let's see. News, jobs, JOLTS came out. Let's see. JOLTS came out around 8:30 a.m. Productivity and cost 8:30 also. There's some Senate hearings about who's joining the FOMC team, about 2 people, I guess. I don't think we need to worry about any of that. However, the 10 o'clock, the factory orders, ISM service index, those could be important, especially the ISM service. Anything starts with ISM, PMI, those are something that we need to pay attention. Definitely, whether it's a green dot or a red dot, I don't care about the color, just need to pay attention. So 10 o'clock, got to keep our, from 9:45 to 10 o'clock, we need to keep our eyes and ears open. And then the rest of the day, there's nothing really going on. Tomorrow, employment situation, 8:30, big market moving event. So tomorrow is going to be interesting. All right, so let's see. Just waiting for market to open. Now take a look at the daily chart real quick. All right. All right, so you can see that this support held very well and the market just went right back. These levels, I don't need to mark them anymore, but see this gap right here? That gap is important. Bulls want to close that gap, but see that right there? But we've been up, I mean, 1, 2, 3 bull bars, and you see that today. This moving average, a simple day, simple moving average, 50, I believe this is 100, yep. So the red is 50, blue is 100, light gray is 150, and then 200 day. I did say that we're going to test above it yesterday, and that was the whole thing, and we did. So now, if we do stay below it, we could come right back down to this. So we could be in this yesterday's body. Okay, we could be trading right in that body today. And then tomorrow, we could be testing a little bit lower, and that would be the pullback. Possibly, we could even end up coming down this way because we are in a trading range, and this is way too bullish. So we need a pullback, and today could be that. So we'll see how it goes. So I'm a little bit bearish today. Where is my... All right, market is open. We're in this demand zone on the 5-minute chart. It's coming from yesterday. Okay. Gap down. We're right at the magnet, 1 hour EMA. Okay. So what does that mean? Well, this was yesterday. So let me check something real quick here. We ended up actually, yeah, we are in, we are in this range now. So let me check something. This is where we opened. So I'm sorry, this was yesterday. I forgot that this is actually an RTH. So this isn't, sorry, this is RTH. So yeah, I knew that we were going to open in some kind of trading range, but I completely forgot because my 1 hour is not RTH, but this is RTH. So you don't have to use RTH. You can use the regular ETH as well. I just like this clean setup. So I knew that we were going to open in this day's range. I thought this was yesterday, but anyway, so we are here. So this is going to be a interesting day. We're already resting on the 150 day. So we came way down too quick. So now we have a gap. Can the bulls actually close this gap and then come down? It's possible. I mean, we have the 20, the 100, 150. This is going to be a mess. Ugh. Not good. This is going to be a mess today. All right, so first bar, I don't see any information other than being gap down. Gap down means gap from the yesterday's close, the high, EMA. I mean, look at the average prices all the way up here. So if this bar closes bullish, okay, so even if it closes bullish doji and the next bar actually closes bullish, we could end up going up here. I'm going to get rid of this to the average price and then come down from there. So if bears want to sell this, all right, because of what just happened here yesterday, then they're going to have to close 2 bear bars. Okay, that's what I'm looking for. So I'm going to wait for bar 1 to finish printing. All right, so we do have a bear flag here in a way, but I don't know yet. So I need more information. All I know is that we're closer to the Globex low. And when you're closer to one of the edges of the Globex range, we could either test low and then just reverse and go back up, or we just violate it and start to come down to this point of control areas that I mark. Those are going to act as support. We could bounce there briefly. Okay. So, and if the bars start to close below the 1 hour EMA, low of yesterday is going to be important. Okay. So you see this area, we're still selling. So this on the higher time frame, this is ETH, higher time frame. This is still a target. Okay. Let me extend this a little bit. So that's 45, 40, 31. I'm going to roll it down to 25. And I'm going to make that, roll it up to 79. Okay. So that should be, sorry, I can't, it just doesn't snap. Oops. So that is 50. We have a bear bar close below this key level. So now this bar needs to keep coming down. That is the target. But first hour, take a look at here. We're just tested. We still haven't moved down below. I mean, we just tested. So this level is important because bulls want to reverse it from there all the way to top. So these are key levels, swing low and swing high. I need to see, you can lower it down to 15-minute. You don't have to have 30-minute. All right, the first bar closed bearish, but I need now the second bar. So now we have a clearly limit order market. Okay, so I'm not gonna sell, obviously, anything. I'm not trading this. I'm getting a rejection levels or breakout levels from this. We did not break out, so I cannot sell. But now we're going back up. We have an outside up bar, and then we also have a higher low. So the bulls immediately started to buy underneath the EMA. So that means, that tells me if they do close this bar, two things can happen. They can sell the close of the strong bull bar. That is a limit order market because two bars are overlapping. Or if they do close at one tick above the bar one's high, okay, then we're going to go to the average price. You know how to measure your average price. You take a 20 bar range here, okay? So you take a 20 bar range high, and a range low. Okay, so what does that mean? Well, EMA is an average price, but the first average price is this right here. So this is where the bulls want to go, but I need to see the bar two close one tick above minimum bar one's high. That will entice buyers, but because the two bars are overlapping fairly strong, don't think we're going to get a buy to close bulls right away of the bar two body. So, excuse me. I want to see the spark close a little bit. It's stronger. Sellers are eagerly waiting every step of the way, but there's a nice gap the bulls want to close, and they can close it before selling again. So 34, let me see. Bulls want to get back up to the 35, 25, 35 area. 45, 35 is the gap close. They could. It's not that far away. We are on a hourly demand zone also. So let's see if they can hold. Now, 45, 27, 50 is important. It's the 33%. I do have, hold on, there's a lot going on here. I have another, I'm gonna get rid of this, okay? Because I have another, on my chart that I found, another, see this right here? Balance zone goes like that, goes up, and then comes down. That right there is balance zone. Goes up, comes down. That right there is balance zone. So I'm gonna get that. Okay. Or you can even take this whole thing because it's a double top and a double bottom. So I'm gonna take the whole area because it's too small. Alrighty, so now let's measure that. Okay. Take this to that. That's my extended. Now get rid of the initial Fibonacci levels. All right, so now we have a new, here is my upper trap zone and a lower trap zone on the higher time frame. Okay, so now this is what I'm gonna be following. I'm gonna get rid of this Wolfie wave. I no longer am interested. Okay, so it's clean. There is this right here. You see this impulse move on the 1 hour EMA? I'm sorry, 1 hour chart. See this impulse move up and then just spike, pullback channel, came back down, went up and tested. Where it originates right here is actually the demand zone. So if you actually take in this whole, see this? Now this 1 hour bar is bouncing, okay? For that reason, but that's one way to find it. Or if you find your balance zone, they dipped below the trap and tagged a shallow target, but if they want to sell it, now 33, they tested the 33%, which is fine. If they want to sell it, they need to close this bar right down here at least, and then close underneath the minus 2340. Then I'd be more inclined to sell this pullback and go again. So right now, I'm just watching this as direction, and we have head and shoulder, a little bit of wonky one, but it still is head and shoulder. This is the first demand zone, so they could still dip to these levels before actually going back up. So what happened here? So bar 2 closed really high, but because it's overlapping, buyers with a limit order, they're waiting above bar 1 to buy. Okay, so now would I have bought this? Probably not. If you buy it, okay, you're gonna have to wait for some of the limit order market, okay, orders to join. But if you bought this, your stop goes underneath here. This is where your stop goes, not 2, but 1. Okay, so you're basically, if that's your stop, and if you entered at the close right here, basically this is what you're looking to do. This is where you're trying to get to the average price of this 20 bar range. Okay, so you're risking this much. Okay, if you entered right here, you're risking that much. I'm gonna wait for always in long setup, meaning I need to see another bull bar. And it's also the news hour, so 9:45, 10 o'clock. Bar one is the problem. If that bar one was a bull bar and bar two closed like that, we would have been already up here and a quick pullback and probably going further more up. But when a bar one and a bar two overlap like this, now, when I was talking about the overlap, they were overlapping pretty good, 90%. Now they have 50% overlap, and that's still trading range. That's still a limit order. So I would not have both that close. That close would have spooked me because of bar one, and because I've seen this happen many times, I would have considered this as a breakout, but it needs to come back down. So what happened to limit order buyers? Well, they tried buying, but it's now proving that it is a limit order market, and I'm just not interested. So if you bought here with a limit order and it's still coming down, you're gonna have to be prepared to buy again with another contract right here. Then you have an average price to get out, and get out with your original contract, and the new contract actually goes. Actually, I'm sorry, you get out with your new contract at the break even, and your original contract is still in the running and making money. But that's why you do not enter with multiple contracts. When I say multiple, 5, 6, 10, you only enter with one, because open is risky. Okay, so what's happened here? You have a doji. Machines put a buy stop order there and a sell stop order here. Buy stop order is activated just like yesterday. Didn't make too much money. They made money, but it didn't make too much money, so they got out. Okay, so now bears are like, well, can we get our sell stops activated and sell? When those sell stops, okay, when market processes those sell stop at a certain low, it will probably gonna bounce to trap those people. Okay, there's that risk also. Okay, so remember, when there are sellers, there are buyers. When there are buyers, there are sellers. So if you got stuck here by buying, you're gonna have to buy here. And when it bounces, you get out. Okay, you get out either with both contracts or just leave your original. And as it goes up a little bit, you still make money, but you're gonna have to be prepared to get out. But I see this, a bear bar and a bull bar, 50% overlapping. I am not going to buy it. So now what can happen? Well, we could get this. We could break below, come back up, break below. As the 20 EMA comes closer, okay, finally we could go right back up. But I would be still looking to sell from there. But I need to see this low taken out by bears first. Hello. So this is a limit order market. You see anything bullish, you sell. You see anything bearish, you buy. This is not a bearish bar. It is bearish, but not as bearish for the limit order machines to buy because of the lower wick. If that bar were closed all the way here, they would have boated a little bit and probably scalped a couple of points before coming down again. When you see a bar in a limit order market that has a small body, it still closes bearish. If I feel the inside like that with line, it's bearish, but the wick is too big. no one's going to buy here. They're probably going to try to buy here perhaps, but I would not buy that. I'm not sure what you mean by the where would stop be considered a front run on the supply zone, on the 5 minute. Are you trying to take profit at a demand zone? I'm sorry, supply zone or demand zone? I'm not sure what you mean. I don't have a supply zone here. Maybe here. There is a order block. I would take this whole base. I would consider this a supply zone, I guess. Yeah. Get rid of that. We already tagged it, so I'm not sure about your front run part of your question. I'm sorry, I don't understand. Front run is, I use it for profit taking. Sorry, I didn't get it. You probably are asking a valid question. I'm just not understanding. I'm sorry, I had a moment there. But okay, so it looks like you got your answer. Price stop right before the low of the bull bar. Okay, so that's not front running. If you go back to the supply and demand zones, just because I'm putting a supply zone there, it's a proximity, okay? Sell orders are tagged. I'm sorry, sell orders are actually start sometimes 1 point, 2 point below the zones or above the zones, okay? Buy orders are above the zones. So I generally look for, say I found this block order, okay? This fake order block, whatever you call it. Now, generally that's what I use, okay? But see, if you use it that way, where did the sell orders begin? Right underneath. But if I see this kind of low, I'm going to take that into consideration as well. That gives me that double top, micro double top, and they sold it. See? So this is covered in the recorded sessions. I always touch base on that. So for example, let's take a look at demand zone, right? So demand zone could be this whole area, but sometimes I also, you see this right there? That's important. So I'm going to mark that. Why? Because look, there is a breakout level. You see that breakout? Some computers take the breakout from this structure or that structure. So you can mark those levels. And as the price gets down here, look what happened here originally. Look at this bar, comes in, goes right back up. But it's so close, I would still take this. I would not, because I would not buy it just because it bounced. It's bouncing because there are buy orders stacked, but because it's a bear bar, I'm not going to buy it. I'm going to wait for price to get in there. So that's the first entry and the second entry. And here's a beautiful outside up or outside down in this case, but it is a pin bar. So it's kind of signaling you that it dipped below this low and now bought it, but unfortunately got stopped at the supply zone. Now it's back. Now we have 1, 2, 3 wedge, okay, with a higher low. Is this going to be the actual buy? So let's see how this bar closes. We're stuck in this. And I did say it's going to be a mess. And we're literally experiencing that right now. Bears want to close bar below bar 1 and activate the sell stop orders. Okay, there are sellers waiting there eagerly, and they want to sell right underneath bar one. But remember, 45.05, I'm going to be paying extra attention to pit stops today because of the MES. 45.05 is a pit stop. We already bounced once. We could dip below it, and we could end up going down to 4,550. 4,550 or 75 is the target. $4,500 and maybe 3/4 or 175, or so somewhere here we could keep pushing this. Okay, if they can't prevent this micro double bottom with bar one and bar five. Okay, so we have, that's terrible on bear's end, but we should keep coming down because it's an important magnet here. I'm counting 40 points down. There's a 40 points. ISM is coming up in 5 minutes, so be careful. All the price action goes out the window. Bears need to violate this. If they want to sell this, they need to violate this double bottom and bar one low. And I do have a 30-minute level. Point of control is right here. We're probably going to test it. I like this to come down a little bit further. That's 0290. If you guys can't see it, I don't know why I selected that color. That's better. See, that dampers. If they're holding this low, this strong, that means institutions want to buy and surprise everybody. But I doubt it. I'm not gonna buy it. This should break. And in fact, if it does break strong, you're gonna get a measured move. Sorry. But I need that low to be violated. If they do violate it, we could come down to here. But you got now triple bottom, okay? And the 40 point, let me see. Oh, sorry, that's not, I think I need to measure from. My 40 point is actually from here. That's the 40 point. I like to see a dip down, is maybe even 10 point further down below the demand zone. But this right here could be trapped, okay, right before the news, making it look like demand zone is buying and people could buy only to come back down, okay? So we'll see. I'm just waiting the news. It's very dangerous right now. I do have a nice structure here. Bears need to break the structure, okay? And they're setting up traps possibly for bulls. Questions are please 10:45, guys. And most of your questions are actually in recorded sessions. If you look at the titles, I have a session explaining how I structure my fibs. Go to that YouTube list and search, or we can revisit the whole question around 10:45. So right now I'm watching. Okay. There is, I'm not interested in buying this at the moment because this could be a very well a trap, and it's kind of looking like, and 10 o'clock ISM coming up. Be careful. We could not only dump the 4,575, we could also dump all the way down to 44.88 or 89, 44.89, 44.88. Including the measured move targets, 44.80, 150. So it's I'm measuring ahead of the show you guys that the structure breaks with a strong bear bar. This is where you're gonna end up going to. Sellers are, like I said, with the sell stop orders, one or two tick underneath bar one, waiting to get activated, but they haven't been activated. All right, here comes the news. News can go up or down. That I cannot control. Now I was going to say ledge, but that is not a ledge. Bar 7 low is not identical to 6, 5, and 1. So this is still a pullback. It still could be a trap for bulls, as they're buying right now, this bar. Okay, so but the structure didn't break. So check out bar 5. That's a mother bar. They just tested the 50% of the mother bar. If the rejection is going to come, it's going to come from there. Okay, see that bar 5? You got two insides bar. Now, that could be that rejection trap I've been looking for. If bears are going to sell this into the 45.0225, like now is the time. And then further down to 4,575 and further down to 44.98, and then maybe 44.9350, and it could extend all the way down to 81.50. Okay, so they're going to have to do a lot better than this and reject this bar. So if you actually measure, let me get rid of this. If you measure the mother bar range, okay, bar 5 is the mother bar. Okay, that's your range. Bar 6 rejected 50%. Bar 50 tested again, but it didn't close underneath. All right, so now the news went all the way up. This is news candle now. Okay, so no break of the structure, but why? Because the sell orders did not get activated, 1 or 2 tick below. None of these bars dipped to get those orders. If this bar fails to close above 100, we're not going to go to these levels. We could still continue to come down to these red levels. So I'm not trading this news candle. So be careful, because it's going to go up and down. Look at the ATR. It's almost 13 points. It can go up 13 points, come down 13 points. There's a nice structure here the bears want to break. Okay. If they want to break it, not going to buy something that may not go furthermore up. You can take the whole entire range. Okay. You don't need to do the mother bar. So let me get rid of this. So if you take the whole entire range and measure it, look where we are getting rejected several occasions. So if bulls want to go up and reject this and go try to close this, okay, gap, they're going to have to close a bar, at least one bull bar above the 50% and go test the highs. I don't see it. I'm not going to buy it. Not interested. Stop orders are waiting still, 1 tick underneath, starting 1 tick, and market hasn't processed any of that yet. But I'm also looking at what's happening on these Globex chart. We do have it's micro double bottom on the 30-minute. That makes it dangerous for bears also. So the bears they're trying to trap bears here underneath the Globex session. But it's still a news candle. I just cannot take this risk. Because we could suddenly come down to 45.0350, 44.88, 87 area. I don't know. Very messy. Kind of saw that mile away before the bell rang, but you can just stay out of this and wait for a clear direction. I would stay out of this. This is still a limit order market. If it goes up, this is where the bulls are trying to go up. This is the second try. Bulls are trying to reverse this. Okay, first try failed, second try, they're trying. If they do fail, we could come down. See how the levels are respected. Now mother bar breaking out with this bar. So if I just get rid of this, okay, this is the mother bar range. I'm gonna recalculate that. Okay, so we did breakout, but it's not a complete breakout. It's the bar broke out and tested the first shallow target, but I don't have yet. There's still 3 minutes and 12 seconds. This bar needs to close outside of the range of the mother bar, which is right here, in order to keep going up to these levels. If bulls want to break out and go up here and claim this and that, this level and that level, and even that level, they're going to have to close this bar 8 above the 100%. Otherwise, it'll be a fake breakout and it could come back down again. I think it's best to wait for news hour to pass and ATR to come down a little bit. So that's the problem right there. They need to close that bull bar above 100% to become bullish, to go test the high and then close the gap. There's still time. They could still do that. There's still 1 minute and 19 seconds. But if it can't, if it becomes a bear bar, then we're coming back down here and we're going to test these levels. So I didn't sell. I didn't buy. I don't like this. Ton of wicks. What the heck is happening? No one knows. It's news. This is machines. This is institutions. I ain't touching it. Now, If I'm going to do one thing, I will definitely would try to enter with a sell stop order right there, parked. Because if they're going to close this bar right here, I'm probably going to get activated and take this as profit. But they need to show me that they want to do that. So that means this bar needs to close bearish, the next bar needs to close bearish, and then activate me. Otherwise, I'm not selling or buying inside here. It's just a like flip a coin kind of situation. I don't do that. All right, so they did close that bar now outside, but it's very weak close. Bulls want to get back above the 123.40. If they do close above 123.40, they're going to try to keep going up to 161.80. But I'm staying out of this. So you got a 5 minutes, 10 minutes, 15 minutes. I look for at least 3 bars to pass news bars before I take any trades. Bulls really want to get above the 123.40, okay, but they're going to have to do better with this bar. It's limit order market. They're selling bull closes, so it's just not reliable. On the 60-minute, you see how it's so dangerous for bulls? There's 48 minutes, and if that bar, hourly bar, actually closes below minus 23.40, we're going to end up coming down here. So there are sell stop orders waiting. And why is it sell stop orders? Look at the void. Look at this empty space. So sellers are eagerly waiting right there. And they want to get filled because they think that this area is going to reject the bulls. So I'm going to let them duke it out and show me what they want to do. Because if this bar closes above 1140, that means bulls are going to violate this trap zone. And then these sellers see that, they're going to know that the bulls are going to want to go at least to the 33% or even test the 50% of this initial zone, initial balance zone. So there's a whole lot of fight going on here. I don't want to be in it. I'm going to wait where they're going to close. If the bulls close a bull bar right here, we're going up here or eventually here. If they close it underneath this minus 11 right here, then bears are going to try to activate those orders and we're going to come down here. So stay out of it. This whole thing, I would not touch it. And that's the news hour. That's exactly what you get. It's wait for 3 or 4 bars, at least 15 or 20 minutes. So bears, let me tell you this, for bears, the number 1 criteria, I need them to actually close a bar below 45.08. If they do close a bar below 45.08, we will definitely tag 45.02.50, okay? But they need, that's their criteria. If they cannot do that, then nope. Still battling. All right, so they're trying to get the continuation now. Okay, so this is good for the bulls. If they do close above 123.40, the next target is the 161.80 and then 20 point. They're trying to get their 20 point, so they're going to go up here. They could actually test the pit stop at 45.25. There will be a lot of profit taken between 45.25 and 45.24, so that 1 point area. So it's see what happened. First bar closed outside of mother bars. Now they're going for their actual target right there. Okay, so this is good for the bulls now.
Trend bar alert. Trend bar alert.
That means
look at opening a
stop
trade.
orders. They're canceling out now. But if you do buy here, remember you're buying into the resistance. You're too late. So you're either in the trade. Okay, we're now at the 20-point zone, and they're taking profit. We need a better profit taking here. It's top of the trading range, but it's 1, 2, 3, 4, 5 bull bars. What do we call this? It's a bull leg in a trading range. So bulls want to break out from the top because there are now buy stop orders waiting there. Okay. Bulls want to get up here to the average price. Okay. So I'm going to get rid of this because EMA moved down. So this makes this the average price. All right, the profit takers are kind of getting out of the way after that wick coming down. But if you're buying here, you're kind of risking buying against this range top. It can be deadly. So .20 is still holding. Measure here. That's 21, the top of the zone. 20 is right there. See, that's profit taking. So bulls need to close a bar above 21, 3 tick above 21 point to keep going up. That means they're going to target the top of the range, bar 3 high, and the EMA in hopes of closing the gap above. It's, if you look at the 5-minute ETA chart, it's 2 cups. So we could get a projected run up, but bulls really need to close a bar above this trading range. So we could end up going up quickly. There's a cup here, but if you look at the ETA chart, see the cup and a cup. Okay. But this is the second test of the supply zone also. So if they want to violate the supply zone, they're going to have to get above it. Or if they're going to sell it, they're going to have to run some stops to sell it. Now, these zones, buy and sell twice. There you go. Okay, they're going for cup and cuppy to cup. So let's see. I think they're going to want to run the stops here. There's another supply zone here. I'll take that one. So there's a chance that these bulls will take profit right there. Be careful. This is a stronger supply zone now. This leg needs a pullback. Here's another cup and cup. So you can, if bulls really want to break out, measure that cup, and you got to project the target right there. First defense from this strong area. But it's very difficult to sell this because you got this really tight bull channel. I think we're going to go back up again. And plus there's point of control on the 30-minute chart that we have not tested. So right here, 35.50. We could end up going there. That's the first sell. I want to see a second sell. So I'm going to wait. If I want to sell this, I'm probably going to wait for this area to be tested. So I probably won't sell this. I'm going to go back. So if you have this level marked, okay, 35.25 to 50. I'm going to go back to here because this is still, average price is still the target for bulls or low of yesterday. Just get rid of this. I'm going to get rid of everything now. Or the close of the gap right there. We could even test the close of yesterday before coming down perhaps, but I'm going to let these guys take their profit and then fail to close this bar too bearish. If they do close it very bearish, then this will come down. But it may not come down too much because it's a strong leg. We breached the high of this, okay, structure. The only problem is that we only breached with a wick. We did not breach with a body. And that's the reason why I don't want to sell it. We're so close to the EMA and we didn't tag it. So I'm going to wait for bulls to get a second leg up, although they have their second leg, but maybe here, if you count it like this, this is actually the second leg. So there are probably buyers underneath bar 11 and the low of bar 10. I don't want to sell it. I'm going to measure to see from the high to the low. Okay. See where the rejection came from. High of yesterday to low of today. Okay. Look where the rejection came, right there, 33%. And that's why we're struggling, because it's a institutional level. But EMA is right there, so we could end up going actually up here to the 50%. That's right. If you're using the 200 EMA, there was a 200 EMA rejection. On the ETA chart. Because it's a deeper pullback, okay? So you can actually see it. If I go to like 3-minute chart, it's my eye is trained, okay? So I could see it like this, leg 1, maybe leg 2, and then leg 3, or go to 2-minute chart, which is right here in front of you, but I'll do it on here. Okay, so this is a pullback also. So you could say 1 pullback, okay, quick pullback, and a third leg. So what does this make? A wedge. What is this? They're trying to sell the wedge failure, but they're failing. So now this could go up furthermore, or get a double top and then get rejection and come down. But I'm not trading the 2-minute chart. So I'm kind of seeing it because you see this, it was a buy, it came down and then went back up. So that's a pullback. Or you can say, no, this is the leg 1 and this is the pullback. I'm looking for a leg 2. That's okay. You can go that way too. Or you can count here. Let me get rid of this. Leg 1, pullback. Maybe this is leg 2. That's also this cup's quick handle. Now let's see if the bulls can actually break out. EMA is still the target, but they need to close this bar body higher than the open of bar 11. So if bulls want to close this gap, they're going to have to close a bar above 33% to get to the 50. Now, I did say that there are buyers waiting underneath. So the limit order buyers bought below the bar body, bar 11. So right around here. Okay, here we go. So I see a new mother bar. What is it? Which bar is it? No, not as a target, as a resistance, 200 EMA. Yep, bar 11 is a mother bar. Get rid of this. Okay. EMA is still the target. Or close of yesterday. If we can get above gap close. I'm sorry, not close of yesterday, close. I meant this. But if we do get above low of yesterday, we become bullish. That means they're going to want to close the gap. So bears want to close a bar below, let's see, mother bars, low range, somewhere around here to come down and test here, but we could actually bounce from there. So if I don't see a bar going below 45, 24, 25, I'm not going to bother with this bear move down. But the EMA is already tagged, so bulls got what they wanted, and what you're seeing here is bar 13 is basically profit taking of these bulls who bought down here. So if you actually were to enter here, okay, so you would have said, hey, okay, this is the first entry, this is the second entry. Like you could probably buy this bar's close and you would go and your stop would be here, but that you're risking this much and you're buying. I didn't recommend doing that due to these bars being what? A news bars. If there was no news scheduled at this point, I would have said buy that and stop here. Your first target is the top and the second target is your EMA. So you could have done that. But I kept saying that if bulls go to a certain level and get above it, the top of the trading range and the EMA are targets. So you could have made that decision on your own because you're seeing buy the close bull bars. You see buy the close, yes, it pulls back, but still it's a buy the close, it's going. So it's looking for a second leg up to the EMA. So I gave you those clues, but I cannot make a recommendation during news candles because it could go either way. So bears still want to close a bar below 24.25, and they could, but the next bar goes above it. That's going to be a trap for bears. So I don't want this. I don't want to touch it because I think the low of yesterday is still target. Okay, they're trying to close below that threshold, so. But I don't see it yet. I don't see a bear bar closing below 24.25. You're welcome. I don't know what I did, but bulls are trying to put in an always in long, but we have not went above the 20 EMA. Yes, these bars are nice, but it's not really an always in long situation yet set up. Without closing a strong bull body above 20 EMA, you're basically not yet always in long. So, but low of yesterday is still the target. Bulls want to chase us up to 3750 area, 3750, maybe 45. Yeah, 3750, 3950. So they're going to have to close bull bars now on. They need to push, but these wicks are a nightmare. I hate them. It's just so not so clean. So bulls are trying to become always in long and get above the 200 EMA. I need a bull close above 45.2850 if they want to keep pushing this to 38.50. I'm sorry, yeah, 38.50 area. So big fight over that 24.25. This structure did not break out well, so bulls really need to do a good job here, get above these highs, and they need maybe 1, 2. So what their machines are seeing here is a 1, 2, and 3 wedge, okay? And that's the problem. They're trying to sell this, okay? But if this bar closes bullish, the selling will be off. So then I'm going to look for maybe a new wedge. So I would like to see this area tagged above low of yesterday. Bears try to sell once with 11. They're trying to sell with bar 13, but I don't know. I think bulls are going to try to take this up to, let me see, 10, possible 35 to 38 area if they can. All right, so they didn't get a, you see what happened there? Bar 14 is not a continuation bear bar. And that's problematic for bears. If that was a bear close, they could have sold it, this wedge, possible wedge. But now, because bar 14 is a bull bar, they're going to try to push towards to 35 to 38 area, 45, 35, 45, 38 possibly. But now bulls need a second bull bar. Bulls need a bar. Okay, so this is basically high one set up. If you're counting from here, that's high one. They're looking for high two. Okay, high one is a good bar. It's a signal bar. Okay, its low went below the low of this bear bar, but it closed as a bull bar. So now you have high one. So there are buyers now waiting above bar 14 in a limit order market. They're trying to buy with a stop order market in a limit order market, but they have a reason, because bar 14 is not a bear bar. So they park their buy orders right above it. Okay, they're hoping to get filled and get to these levels, get to these levels, get to these levels. Okay, but this is a limit order market. So very dicey in my opinion, but they will get filled, and they just got filled. So if you actually got filled one tick above bar 14, you're looking for a 1 point and furthermore up. And this is what I was expecting. This is what I wanted to see. Yeah, baby, keep going. Now, we could keep going up to 35, 36 possibly. Don't come down. Keep going. That mother bar high, they try to breach it, but what a nightmare. Come on. That was a good move. Why you guys are failing? It's trying to, bears are trying to get a double top at the EMA with bar 13 high. But like I said, that is the first entry. Bulls need a second entry bull. Okay. And I did say, you know, it's kind of dangerous, because why? They did make a 1 point. So if you actually bought right one tick above 31, 45, 31 is the one tick above 14. 32, 25, you get 5 ticks to get a 1 point. They got a lot more than that. So they got their 1 point, but they need, but because you're buying the first entry in a limit order, that's going to come back down real quick. And you got this 1, 2, and 3 push wicks. I don't know. Bulls need to close this bar up here, and then they're looking for a second entry. You could have say, hey, this is the second entry if I go with this, but we made a new high, so I'm counting from here. But if you do count from here, this is the second entry. This bar hasn't closed. It could still close up here. That could get continuation. But what the machines are seeing, hey, there's a double top here. Let's let's take profit. And the bulls see that too. Bull machines see that too. That's why they got their 1 point and get out of the way. But if this bar 15 body closes one tick above 14, we could get continuation up to 45, 34, 45, 35, even furthermore up to 35, 50 possibly. And if we do close above 45, 35, then we're going to try to close the gap. Gap closes here, shallow gap, and then the actual gap closes with the body at the close of yesterday. But it's just struggling right now. So 38 seconds, 35 seconds left. Bulls need to push this body up and not close it like this. Oh, no, they're failing. But it's not yet done. 3 seconds. Last second, they need to do the minimum and prevent a bear close. Okay, they did do the minimum to prevent a bear close. They did it. Good for the bulls. See what happened with the bar 15? That's the minimum. And bulls could do prevent, but it's still not a good bar. It's still a horrible bar for bulls. And that's what you get if you try to buy with a stop order in a limit order market. You don't go too far. So now bulls are looking for a second entry bull, okay? So they're looking for bars closing higher. There's a lot of uncertainty here right now. Can this come down? Sure, it could actually come down all the way to here if bears take over. If bulls cannot get their second entry, they're going to give up very quickly. I like to see bulls actually prevent bears from selling and keep going up to the close of yesterday area and sell from there instead. Now there's some kind of a bull flag happening here. I don't know if you guys notice it, but one pullback, two pullback, third pullback. That's becoming a very strong bear bar now. And it's a close below the 10 EMA, so they're going to try to sell this now. No breakout from the mother bars high, no breakout from the mother bars low yet. Both the trap zones are trapping either side. So bears need to close a body still 24, 25. Hold on. And yeah, so they're trying to close this bear bar below that still 24, 25 to sell. If they fail to close it, bulls are going to take over. So see that? This is like a bull flat in a way. And this is a micro bull channel. These kind of sell-off could last short. I mean, they may not last too long. I don't know. Just if they do close this bar bearish, they're going to try to keep selling below 24, 25. That's what the bears want. At least get to the 45, 1875 or 45, 19 to take profit before going back up again. But see, bulls did the minimum, yet they failed. So bears tried selling, failed. Bears tried selling. Bulls tried buying. Twice they failed. So now the bears took over. So now bears are coming to get their 18, 75, 19. They got their target. That's the shallow target. If they do close below it, they could actually sell all the way down to this trading range low. So we now have a solid trading range. But I'm not sure if they can. I'll assess that when this bar closes. If it closes really strong bearish outside the mother bar's range, yes, then they will sell it maybe with a quick pullback. Okay, so they did close it. So there could be a pullback and then sell further down. But this is also micro channel with a kind of a bull flat. And it's a trading range, tight trading range. So machines are buying the close of bar 16. They're scalping. If they scalp out and this pullback lasts, ends right here, bears are going to try to sell it. But if there are buy orders there and they want to go right back up, and those who actually sell the pullback will be trapped. So I don't know. I don't want to. I need to see where this bar is going to close before selling. So it could pull all the way back to 33% area, or it will get rejected. Then the bears will sell it down to the minus 6180. If it closes, okay, right around here. Right now, they're trying to sell it, okay, right here with the rejection, but bar hasn't closed. Bears need a consecutive bear bar to sell this further down. Bulls are trying to reject because this is a micro bull channel and they want to keep going up. Another messy morning brought to you by the daily chart. I warned you about this. See, that's the problem. I just didn't want to sell. They couldn't find sellers. Now it goes up to the 33%. And if it gets above 50%, these bears are going to be trapped. Low of yesterday is still the target. The only problem with this is that we still don't have always in long. And bears know that because we didn't close a strong bull bar above the EMA. Instead, we got a double top. So they're trying to exploit that and sell it, but they're trying to sell against this bull micro leg. So they did test the 33%, and now they're trying to sell the 33%. But if that bar closes above 33% line, then it'll be the end of the bears probably. But if they do close it around below 1140, then they have a potential to coming down here. So those levels are important. All right, Bulls did close above the 33. Now they want to close above 50%. They're trying to prevent bears from selling, but it is, again, we're stuck in this tight trading range. Okay, so there is no stop order, meaning you cannot buy one tick above this bar, 17. You're going to have to buy the pullbacks if you want to buy and go long, or you're going to have to sell the pullbacks with a limit order. I'd like to see a better double top like this to sell. All right, so the target is for bulls 45, 30, 50. For scalp, 35, 30, 50 if they can push. And if they do break above 35, 30, 50, they could end up going up to the low of yesterday. No close above the 50% of mother bar. This breakout failed for bears. We have a new mother bar, bar 16. I'm going to take that. Okay, as guidance. As it gets to the trap zone, you're going to get always rejection first. But low of yesterday is still target. Bears want a double top, okay, right there, and sell again. Bulls want to test the low of yesterday and close above it and close the gap above it. So see, as they come into the trap zone, immediately the wick forms. That's the early defense, okay? Mother bar is defending because it's a bear bar, so there's sellers waiting there. It's a mess. Now bears need to close below 21.75 and open a new bear bars below 21.75 to sell into 45.16. If they cannot do it, bulls are buying the pullbacks in hopes of going back up to these levels. So it's tough. And bears just failed there briefly, right? That 21.75. So now they're trying again. But if this bar fails too, bulls will take over. So this is the second time bears are trying to sell. All right, they breached that with a wick, 21.75. They just breached this. Now they're trying to close a bar, but now they're coming into the trap zone. See, in the mother bar, this trap zone begins right there. Trap zone begins right here. The first test, they sold. When they come down here, there's possibility to bounce for bulls. Bulls are waiting there. So until there's a breakout from the either side of the mother bar's upper or lower range, there's no breakout. There will always be traps. What is this noise? Do you guys hear this? Why am I getting a phone call from? Why is Nadine? You guys were calling me. Why? What happened? I started getting a phone call from you guys through Discord. Did you guys lose me or something? You can't hear me? I think that was Ellen. It was like, I think I'm just gonna call her in the middle of her webinar just to mess with her. That was a cute. I've never heard that before. It's like, wait, something's beeping, and that was a nice dial tone. It said Nadine, Bob, Ellen, Roger, and Randy calling you all together. Okay. All right. So bears are trying to close this bar below the 21.75. And they're breaking below. They're coming down to get that target.
Trend bar alert. Trend bar alert.
Oh,
Look at
shit.
opening a trade.
I was just moving things around and I clicked on the wrong button. Yeah, Clara. That's exactly what was happening, I think. It's too funny. New traders, we don't discuss other pro traders here in their, in our trade room. So if you're asking me questions, I'm not going to answer them. Sorry. I'm not discussing other traders' methods. And this is Bullish Bears trade room. So we have rules. Please read them if you're just joining. And if you're a trial, we have a whole, right when you join, we sent those rules. Read them. No bar closed either. So there you have it. So now bears failed. You got a wedge, 1, 2, and 3. Now we're getting kind of a bull flag underneath the EMA. Okay. Still a tight trading range. All right, so what is... New traders should stay out of this environment and wait for clarity. It's not a stop order. You had a stop order here briefly. So this is not a stop order market. You do have a wedge here, but buying above bar 19 is very dangerous. It's a strong bull bar. I'm sorry, bear bar. You're not going to go too far. And look what happened. All the buy orders got activated above it, and then it just collapsed right back down. So you need to wait to see a bull close, have a little gap like this, and then maybe buy the other bar if that's what you want. Or a bar like this, chances are it's going to want to test the 50% of its area for limit order entries, so which is right here. So this bar could collapse, okay, to 50% and look for buyers here. And if you bought above it, you're going to have to endure a lot of pullback. So you're going to learn what is a risky bar, and any pin bar is, it's not ideal to buy or sell. You just have to understand how it works, especially if it's in a limit order environment. Any pin bar will actually look to pull back to its 50% level. All right, so it did pull back is between the 66% and the 50% area, okay, and found buyers. We've got a wedge here. You can count from there or there. Now you got a bull flag. They're trying to finally get that always in long. Bulls are trying to get up to 45, 34, 50 is where they want to get, but they need to, let me show you what I'm looking at. See this right here? So bulls need to close a bar above 33%. Bears trapped right underneath the trap zone. It's no continuation after a breakdown. They did get a continuation with this, but shallow target. After that, they could not close it. So that's no continuation. So bulls are trying to take over on the hourly. all right? But you can even see hourly we're sideways, but slightly bullish. So that means bulls need to close above this 33%. If they do, we're going to keep going up to the 50. Okay, we already tagged 50 came down, and there's a possibility we could actually break above it. And if we do, this is going to be a swing, possibly. But I need to see 33%, a bar. And when the bar gets to the 33% and above, that actually means that they're filling this gap. That is bullish pressure. That means we're going to get to here and possibly here and get rejected there for briefly. So I'm looking for a bull bar close above 33%, okay? And bulls are going to keep pushing, keep pushing. Always in long. Should be a car plate. How do we do that? Wait, always in long. ALWYS, maybe dash 0L0 NG. No, that's too much. I think you only get like 8 characters on a one number, and total of 8 characters, isn't it, on a car special license plate? 2, 3, 4, 5, 6, 7, 8, 9. I've got 9. So it doesn't fit well. I don't know what to take out. Okay, everybody pay attention to the price action. This is a mess. Let's just wait a little bit. There you go. They're trying to get that. And by the time this bar closes, we could easily reach the 50%. So this is good for the bulls, okay? But this right here, this whole area is a mess. So all these wicks, bulls need to break above this level. And there you have it. We're going to the low of yesterday. Now they're trying to get that always in long. All right. So they need to close this bar now strong. This is target. I'm just going to take that mother bar. 33.25 is still target. It's low of yesterday is target. We should be able to get to 160, 180, but first things first. I found a better one. How's that? I will get a lot of horns on that one. Like, honk, honk, honk. Horn blowing. So there you have it. That's mine. I'm copywriting it. I trademark it. It's mine. You can't take it. All right, 1 hour did reach the 50%, if you have noticed. And if they do close above 50%, that's going to start a swing up. But you see this area right here? Let me show you guys something. Now I see something. What do you see? Double top, double bottom, goes up, comes down, goes up again. What is that? That's the initial balance zone right there. So, especially right here, these bars right there. So I'm going to take them, like right that area. Okay. And I'm going to measure. Hold on. I didn't measure right there. So this is my 5-minute chart. Okay, balance zone I found. Bears want a double top bear flag here, but we're kind of in always in long. But you see this? We're testing the initial balance zone high. So that's a trap on its own. Remember, you got an initial balance zone, okay? And you have the extended. Right here is a trap, right here is a trap. Look, they got trapped. Now they're testing the high. They might be getting trapped. But if they cannot close below 50%, we're going to go test right up there. So that 50% is very important. Or you can count, look, bears moved the market 14 point, right? Even tested lower, but they couldn't get to the 20 point. Now, how much did the bulls move the market? You measure from here, right? So they moved the market 14, 13, I'm sorry, 12 something. So 14 point, they're trying to tag the 14 point zone. They came all the way up here, 13. They actually tagged the zone right at the edge. 14 point is right there. So they could actually continue to push up. They barely tested. Maybe wait a minute. Yeah, so that is the 14. If that's 14, 35, 25, 34, 25 was the 13 low of the zone. So they have tested it. And that right there is a profit taken, but it's not properly tested. So let's see if the bulls can actually push this a little bit further up. You can just use the point counting method. Low of yesterday is right there. It's a magnet. And it's right where the 14 point, the center of the zone is. So that's where they're trying to get to. But I'm not discounting bears with the double top bear flag that they're trying to form, okay, right at the EMA. But there's a point, there's a TP is 14 zone right there. I like them to test it at least. It's a mess today. It's inside bar after inside bar after inside bar. Oh, bears are really trying for that double top. Do you see it though? You need to be able to see it. So let me show you. You can't really see it here. That's the second cell bears right there from the supply zone there. And it also happens to be the double top. But you see, this is the, let me make that a little bit thicker. That's your EMA. First top, second top, generally a trap for bulls. They're going for it. Bears are really going for it. It's by selling on one tick underneath bar 22. That's also still a profit taking at the 20-point zone. So now watch. How much did the bears move? Did they get a 6-pointer? Yep. So now they're trying to go for 10 point. 10 point is right there. They already tagged. So if they close below the 11 point, they're going to go for a 14 point. So there you have it. 11. They need 11.75. I need a bear body closing right here in order to get to the 14-point bear zone. If they cannot do that, so they're taking that wick right there is testing of a zone, take profit zone, and that wick is taking profit. But if there are no buyers there, there will be more sellers. But because this is a tight trading range, limit order sellers are waiting maybe a 1 point below or like 4 or 5 tick up here. They're looking for a pullback and they want to sell it. That's the limit order entry. But this is strong. There you go. They are closing a bar. I need that bar to close in order to get to 14 point, which is right here. So the bears are going to keep pushing into the 14 point. There you have it. So what happened here? That's the initial balance zone trap area. How do I know it? Well, if you actually measure initial zone, look where the trap came in. Let me get rid of this. Look. Initial zone has a trap from here to there. Look at that trap. And no consecutive bars, bull bars, and it comes right back down. When they first sold, look at the trap. Initial here. They actually reached the target, and then just went right back up. But look at that. It's the first time they're testing above the initial zone. So I always pay attention to these things. I don't have it on the chart, but I already know that this is the first time they're testing the initial zones high. There's a trap set. And that trap happens to be also double top trap at the EMA. And you got a leg down, bear leg down. So the bears really want that, okay, bear flag. So now they have a strong. So now I'm trying to figure out where can they take profit if they're selling. I mean, you're selling a 5-minute chart, okay? You need to take profit. That's where you start to count for points. You can count from here. Look, they're inside the 14-point zone. Zone begins at 13, goes all the way to 15. So they're still there. Now, if they do break this strongly, they haven't taken decent profit here. So this is still going to bounce probably up. And that bounce could fill the limit order sellers underneath bar 22. But if they do breach 15 point and 3 ticks area right there, then the next zone that they're going to get to is the 20 point right there. So the bears are still pushing. But you're in the take profit zone right now. So they need, these sellers will take profit. See, that's it. They're taking profit right there. because they meet an objective. That's still a profit taking bar right there from the zone. And I don't see, if you want to see a continuation down into these areas, you need to see a bar, bear bar closing right here. But let them take profit first. And how would you know that this bear flag fails? Well, if we dip right there, okay, we're going to come down here. This is a demand zone. And if we do come down here, I would look for a bounce. Bouncing at a demand zone, not being able to take those lows out, okay, that's a bear flag failure. Then you look for a small pullback bull trend to go up. And it can go all the way up to here, rest of the day. So yes, I see a double top trap for bulls, but I need to see bears selling and taking out this low. If they fail to do so, this could just create a small pullback bull trend for a couple of hours, go all the way up top here. That's one scenario. And the next scenario is rather grim. We would never actually close the gap. We would end up going to the low of yesterday and then stay in this trading range for the rest of the day, all the way to the close. You sure don't want to trade that. And unfortunately, it looks like it at the moment. So all I can do is maybe a 10-point trading with point counting. That would be really bad. And we get those days once a month. We get those days, and that's part of the price action, S&P. So, but we don't know that yet. So we're right now in this, we've been in this trading range. It's really messy. So all I can do right now is use these levels, use the point counting, and that's all I can do. I mean, you could see that we are stuck in this range on the Globex. Bears try selling, fail. Bulls are trying to buy, they're failing. All right, so here comes, right? We just breached the threshold, 15 point and 3 ticks. That means we're breaching below the 14-point zone. Where do you think it's going? It's going to the 20-point zone. It starts at 19 point. 19 point. They just tagged the 19 point, I think. Yep. So as soon as they tag it, that wick forms. See, it's pulling back. That's the machines taking profit, but it could continue to the 20 point. So what it's doing right now is it's trying to come down to this. I'm going to take this area as demand zone. Okay. It's looking for buyers. Might even take, that's too much, I think. I'm gonna take this because there's some kind of gap there, so I'm gonna keep it maybe try on take that underneath bar 9 low. So this is the demand zone. See how the 19 point, they just tested the 19 point and just jump right up. That's profit taking. So what's with these bars? Well, we are still sell under the bar 22. Now, bar 23 is a beautiful bar, but it's coming down towards a tight trading range lows, right? It gets continuation because it's a really strong close. So it will get continuation. It continues, but look where it goes. The magnet, 1 hour EMA's magnet, the trap zone of the extended balance zone area is targets, right? And we have 3 push, wedge, and now an inside bar. So machines see these and they say, okay, listen, this is really trappy here. They want to come down here, but if you're counting with the zones, once a take profit zone is hit, you need to take profit, and that's what they are doing. They're taking profit, but there are no buyers yet. This is just these bears scared taking profit at the zone just in case. Okay, if there are no buy orders here, they're going to keep selling. They're going to continue to resume this micro trend, and they're going to try to come down here. Buyers are waiting here. This is the demand zone. Oh, there's another one. I like that too, but that's 9 characters. So I don't think you can have 9 characters on the license plate. Yeah, you can't. So you need to lose either the pound sign or something else. And I don't think you can use a pound sign on a license plate. Not in Jersey. Although I don't know. I'm not 100% sure. All right, so the profit taking ended, and I'm looking for continuation into the demand zone. Oh, you were. Oh, that's right. Oh, I see what you're doing. I see. I'm sorry. I was a little slow there. Cool. Awesome. Mess. I warned you guys. This was going to be a mess this morning. So there will be a nice swing set up coming up, possibly sometime around, if this continues to stay in this trading range, I would be probably, let me put a line here, sometime around noon, I'm sorry, 1 o'clock or 1:30, we would get some kind of a nice breakout, because it is already 11:34. So because you have up, down, another up, it's total confusion happening here. I don't think the bears are going to be able to sell and the bulls aren't going to be able to buy this strongly. It's just a mess. So I'm not expecting a strong breakout today, but I think we have not seen the low of day and we have not seen the high of day yet. So we're going to go either way. So we might come down only to go right back up again. Okay. In fact, if I just delete everything, you have this thing. It's kind of a megaphone pattern, okay, with the apex right here. So we could come down here and then go right back up again, all right, to these levels. It's a mess. All right, do you guys have any other questions? Because I need to end the session. It's already 11:30. There's one question from Michael Martin. Hi, Rose. Is a 2-bar scalp a good trade in a trading range, or is it only for trends? No, you can use it. You can use the 2-bar. Are you still here? Okay, so you can hear me. All right, I don't need to. Yeah, you can still use it. Definitely. So how would you do that? Right? So let's talk about it. So you got a strong close and you got a strong close. If you do sell this close, okay, you're selling into low, trading range low, okay? And this is a limit order market. So it's probably, it opens here, okay? And it goes up first. Why does it go up? Because it's a limit order market, so it's gonna go up. So if I see something, everything's within context, okay? So you have to make a decision where you can sell. If I don't see a strong, gap in between or void, I'm not gonna sell anything I see that is strong. You gotta know what is a limit order market, what is a stop order market first. If you see that these lows are too close and you're too much down below, selling here could be way too low for bears, and bears don't like to sell low. So you got to ask yourself, if I sell here, where would I put my stop? How much pullback can I stomach? Okay. So if you actually sold here, look, then you waited this long, 7 points first pullback, and then it came down, right? You still make that, but that 7 points is $350, right? With single E-mini. So you read $350 only to make a point or two underneath. So, and then it comes down, eventually comes down here. That's a 4 point. So you make a 2 point there easily. Okay. And then it goes and closes here, where when it closes, you already made a 2 point. So if you're going for a 1 point, you're risking 7 points. Okay. So what you would do, you see a situation like this. Okay. You're at the lows. First, measure the SPAR that you want to sell. See if you can get in instead of market sell at the close. See if you can actually sell the 50% of the SPAR or the 66% or as early as 33%. Some machines will sell here, here, and here, and it gets down. They scalp and they make money, and then they leave this alone. They make money at the lows. Okay, so you got to think of that. Now, let's take a look at another bar. Here it is. You got a bull close, which is really poor, but it's a bull bar. You're looking for 2 bars. One of them is a strong close. One of them can be a weak close. And here's a weak close, and here's a strong close, bar 6 and 7. But even the bar 7 is not a strong close. It's got an upper wick that is really big. So, and you're in a tight trading range with a very small void. What will you do? Would you buy this with a market order? If you do buy it, you know this is going to pull back on you. There's a chance. Okay. And look how much it pulled back. It pulled back 4.5 points, right? So that's $225. So what do? Do what I do. Measure it. If you're going to really buy it, try to get in at the either 50% as early as 66 or to 33. Okay, you can put one micro, another micro, another micro. As they get filled, you're making money. Okay, that's how I would buy. But now you have third bar. You're already in the buy, so it doesn't matter, right? There's nothing to sell here. There's nothing to buy here. There's nothing to sell here, but there is one right here. Okay, there are two bars. Both of them close really bad. This one closed in its mid, but it's got upper wick and a lower wick. It's mile long. This one closed above its 50%. It's got a lower wick. It's bigger than the body. Would you sell this? Right there, it's telling you, dude, don't sell me because I'm already in my second leg or my third leg, okay? And you're going against a micro channel, and I'm not giving you a good signal or trigger bars. I would skip this. There's nothing to sell here. Now you got this, okay? Two bull bars. One of them is really strong. Okay, close. Yes, it's got an upper wick and lower wick. It didn't close all the way up here, but it is still strong. Would you buy this? If you buy that, what are you buying into? You're buying too high. You're forced to buy too high. That's bound to come down. Right there, I'm using my, okay, be careful, idiot. If you do buy this, girl, you're gonna get trapped here so bad. Don't do it. Okay, that's the card I'm reading. So if I buy this, I'm an idiot, total idiot, buying into a strong, okay, resistance that sold here before. What do? You really want to buy this? You're like, no, I want to buy it. Okay, fine. Then measure that. Okay. Try to get in at the 50%. Okay. And if it goes up and you make a point, that's great. If it doesn't make no more than a point, that's fine. You just skip, get out. Now you have two bar. Look at this one. This bar closed really strong, and it's actually breaking a structure too. Look at that. This is a structure. It's breaking, right? So what do? You can actually measure. That's the measured move target, okay? But if you do sell this, if you do sell it, again, you make the points, you even go to the measured move target safely, but you're still, if you do enter here, that's a 2.5 point, okay? Pull back. But if you actually measured this bar, look where they sold, look where the machine sold, because you're still in this tight trading range. They sold right here. They had orders stack here, all orders stack here, maybe in between, orders stack here. Orders stack here got filled. These canceled out. That one sold into the structural breakdown, measured move target right there. So that's how you do it, Martin or Michael. All right, you guys have a great day. We're stuck in this trading range. I would wait for this areas to be tagged. It's coming down because it's a wonky megaphone pattern, but it is a megaphone pattern. And so it's coming down, or expanding triangle. Okay. I mean, I'm just, this could be all day long trading range, only to break out maybe the last second. That's possible. Or this flag is going to fail, and then finally we're going to start a couple of hours long, okay, small pullback bull trend to the highs, or we're going to break this. Okay, let me remove all of this, right? There's a structure here. Watch. There's a big structure here. If the bears are going to sell this, they could sell and project it down to here. Okay. Well, you're asking a question, how do you do it? I need to see an example. I read the bars, okay? I read the bars, I count the points. So those take profit levels are important for me. If I have a runner going into a take profit zone like 10, 14, 20, 40, I'm going to take profit there because it's going to bounce there. And that bounce could bring that price right back to your break even. And your runner could die. And if you don't take profit properly, it could actually reverse back up, and then you'd be given back what you made with early contracts. So that's what you're asking, and I understand that. How do I determine it? Like as I'm explaining this, okay, I'm also measuring. I'm measuring, how much the price moved. Like it moved to 20 points, right? This is the 20-point zone. And now it's bouncing. Say I entered right here. Say I entered here. This is my entry. I took a 2-point here and I want to see, okay, the 20-point. I also take profit here. All right. I know that this is going to bounce. And if it bounced strongly, it could go up here. But I'm also counting how many bear bars and how many bull bars in this. So if the bulls are going to take over, how many bear bars are they going against? They're going against 1, 2, 3, 4, 5 bear bars. And there's only one bull bar. Do you think they're going to bounce it all the way up here? I doubt it. This is probably going to get a second leg down. So then I know I could stay in my, short. And I could, so this was the 1-to-1. There's another one right here, a structure. So now I'm thinking, can they come down to the 44.99? Okay. Can they do it? That's what I'm looking for. So maybe a 40-point. Can they come down to the 40 points zone? Can I trail my stop, right? You're not going to trail your stop if you don't see a lower high and then the low is bridged, right? You're not going to take that stop and take a trail here or trail here if price is not going down. But if it's going down and taking out those lows or whatever, right? So you can trail that stop. Otherwise, your stop should be, if you're scared, should be 1 tick below the break even. So if you entered here, okay, and you sold, maybe like took two points, right? Or 1 point. You took 1 point and your runner is running. So that would be 20. So you took 1 point and your runner is running. You know that you're in the 20-point zone right there, right? If the bear bars start to close underneath the 21 and 3 ticks, that means 21.75, right? Right here. That means you can take that break-even stop and put it on this lower high, because by the time the bars breach, okay, this area and close a bear bar, you got a new low. This low was breached. So that means this becomes a lower high. You can take that, whatever that stop, put it right above it, okay? Even if it just goes right back and gets your stop, your runner still makes money. So it's just, trailing is difficult in a trading range environment. You have to be quick when you're taking profits, okay? This is not a stop order market. This is a limit order market. Limit order market, machines scalp very fast. They don't move around stops. They just scalp and get out. So that's what you're supposed to do. If you're trading with 1 contract, I can't help you. You have to at least trade with 2 contracts. So it's Curze, that's a totally different method. It has nothing to do with the congestion zones or support levels or whatever. Machines are programmed to do one thing, and that's what they're doing with the point counting. So if I'm trading this, I'm very fast. Like what is the strategy I'm trying to trade, right? So I'm trying to trade in a tight trading range, 2 bars, like what Michael Martin asked, right? So if my goal is to grab a 1 point or 2 point, I will take that. ATR is 5 point. Half of that is 2.5. Take out 2 ticks, that's 2 point. If I can get a 2 point out of this, I'm done. That's my goal, because look at these bars. They're coming down, going up, coming down. They're like 1 bar tight trading range. There's nothing there that tells you that you could make a 5-point move to down or up, nothing. So you can't really know. The only thing that you know is that market moved 6 points, came to 10 points, pulled back, came to 14 points, now in the 20 points. It took a profit, but there are no continuous bull bars. Can I stay in my short? Now I need to see the 21.75 mark, okay, point mark is breached with a bear bar, then yes, I can stay in my short because it's going to keep coming down. Where? Probably to this prior lows to test. There's sell stops order underneath market. There's sellers waiting to sell. There are also buyers have stops there. So this is a liquidity pool. So if the bears want to, get into that, or the market wants to tap that liquidity pool, I have a chance that this could come down. But in order to do that, again, 21.75 area needs to be closed with a bear bar. Then it could continue to come down. Now this bar becomes your lower high. You take that stop, put above it, okay? If it comes down here and it goes right back up, there's nothing I can do. There's nothing you can do. That's what the stop is for. Your stop is way below the entry price anyway. That means your runner ran certain amount and the market decided to do something and you had no idea what it was going to do. That's what the stop is for. It takes you out, but you made money. So you have to practice. There's no such rule in the market. The market is going to gift you 5 points, 10 points all the time. The only time that it's going to gift you, if you're patient enough to look for 3 push wedge and you sell a bear bar, inside bear bar like bar 22, and you grab your first, 5 point, that's a 6.5, okay, and then you let your runner run to the 10 point, which is right there. So you took a 10 point before the structural lows are breached, okay? Or what you can do is it reaches the 10 point and you see it's still going, take that stop from above, put it right there, 10 point. If it goes right back to the 10 point, you already made a 10 point. Your runner didn't run. So, so that's what you could do. Now there's a wedge here, but there's no buy signal yet. There's wedge 16, 19, and possibly 27. Or there's an inside wedge here, up, down, up, down, up. So there's another wedge here. It's coming down to form the last. And then if there's an inside bar, bull bar closing on its high, you could buy that perhaps and look for a 5 point. Oh, I moved that stop. I don't care. That's what it's for. I see a good lower high, I'm going to move it. I see a good micro lower high, I'm going to move it if I'm selling. If I'm buying, I see a good higher low, I'm going to move it right up there, right? So it's just, you can't, otherwise market can get you in this kind of environment. I mean, it's been just going sideways. So or what can you do now? See, it's selling now. Now you have a lower high right above bar 28. You just take that stop, you entered here, put it right there. So this much is your actual reward for the runner. But now where are you going into, Clara? You're going into that demand zone that I talked about, which is right there. You're in the demand zone now, and buyers can show up any second. If you see a bull bar, forming, that's going to be the first bar. So you can actually trail that right down there, or just hit close and get out to maximize your runner's profit. Okay, so there you go. So we got a micro wedge right there, 24, 27, and 29. So now you have an inside bull bar. If your stop is like one tick above 28, it's potentially at risk. It's also spike, pullback, and kind of a channel. This could continue to come down. So stop should be there, and it should be sitting there, and you shouldn't be fiddling with it. There's still no bull bar. So bulls, the market hasn't reached the demand zone yet or found any buyers around it yet. So it can still continue to drop. Oh, the reason why I move it back up, because I'm calculating the ATR value. I don't know if you noticed, you have to go back. I constantly type in those videos. I'm looking at the ATR value from where the bar, where the price is to my stop. And I look at it, and that's the one that I try to use. Okay, so for example, here, from here, it's 625, right? So the 625, that's it, right? So it's telling me, market can move 6 points and 25. So 6 points and a 6 point and a 1 tick, it can move up. Would I want to put my stop here? No, there's a lower high here. Stop should be there. Okay. That's what I'm calculating. But if I think that I'm in danger and the market is actually can push, I can take that stop. Oops, sorry. I can take that stop if I'm getting prepared to take profit, because I do think that the bears are finalizing their sell because they're running into a strong demand zone. Okay. And I count the legs, I can actually move it down to that level right there, maybe a 1 tick above right there. So this way, instead of sitting here and waiting my stop to get hit at the 45.19, I'm adding 2 points and an extra tick, okay, to my reward. So if it's going to come and get me quickly, that's fine, because that's what the market is telling me. It could move 6 points and a tick up or down. As it moves down and this number changes, I adjust the measurement, and then I can keep trailing that stop, okay, up or down. That's what I was doing in the videos. Okay, so hopefully it's helpful. See, your stop is still above bar 28 and it's still dumping. It's trying to get to, it's in a demand zone right now. So it's getting a little dicey here. And you can see that this is leg 1, pull back, leg 2. So somewhere around here, buyers are waiting. Or the decimal line, which is further, its demand zone level is, I think, around like 45.06, which is right around here. So they could come all the way down here. Okay. So now you measure from here, 625, give or take. Right? It's still 648. It's not 650. If something is not 650, then you need to roll it down 1 extra tick. That's 625. See, as it moves down, I'm moving it down with it. What is this pattern? Okay, I did tell you guys, watch out. Bears, yes, we try to get in always in long, but this is the only bar since the open closed above 20 EMA. Bar 21 is the only bull bar closed strongly, but where is the continuation there? None. So what do we got? We've got a bull trap, double top. What comes after double top? Two-legged move down into some demand zone, some support, okay? They're trying to activate the sell stop liquidity here. So they're coming down there. So there you go. We reached 45.06, which I said that their buyers probably there. There comes the first buy orders. There comes the first buy orders. Okay, so I'm done with the session, guys. I've already extended it too long. I'm going to end it now. So the session is recorded and will be posted at the end of the day. And I'll see you guys next week. Have a good weekend. Okay. But one thing I also want to show you guys before I go, what do you guys see here? What do you see here? If it's a wedge, that means there are 3 pushes, right? What is a 3 push? Well, one, 2, 3, 4, Wolfie wave, right? So where's the price now? If this is a bear Wolfie wave, we're testing the projected target. Yep. And this is one of the most difficult Wolfie waves. Impulse, move, correction. Impulse, move, correction, impulse. Okay? Bears failed. Bulls failed. They try to push 3 times and they failed. And you see that there's one lonely bull bar closing above. And a trap. So this is target. This is target. And projected line also target. Okay? So now, if bears actually strongly breach this level, that means I'm looking for a really strong bear bar, okay, something like this. Then you have a measured move possibility, projected down. But first you need that breach. I know I do that, and which is actually a bad habit. But it's just so nice, and I want you guys to learn. There you go, here. Hello, not you. So that's the measured move target for bears now. Or if you're not so sure, you can use this. That's the conservative target, 99.25. There will be profit taken there. And if they do breach below it, they could continue down. It may not be a clean, swift move down, but it could be a couple of legs down possible. But first, you need to pay yourself here. Now, also, point counters. How much did we move? That's a 33, almost 34 point. So where's the 40 point? 40 point is right here. So we're probably going to move there. We're probably going to test the 40 point zone. So here comes I did say that, if bulls cannot get a grip, today could be a bear day. But because this is such a mess at the open, I don't think we're going to get a huge bear day. I don't think we're going to get a big bear move up or a big bull move up. This is now a trading range. We could end up closing at the, even if we come down, we could close at somewhere around open tick price. So be careful how much moves you're trying to get out of these bear legs. Okay, this is already overextended. 99.25, you should pay yourself and have a runner into the 40 point and possibly maybe a 10 extra point from there. 5 to 10 point extra. So we may not tag here, but we could tag this, which we just did. 99.25 was the target. So hopefully you guys made some money there. And then we could continue to come down to my 30 point zone. Zone begins 1 point above where it says 40, okay? Goes 1 point below where it says 40. It's zones are 2 point long. And once the 40 point is breached, if there's velocity, we can actually continue to sell extra 10 up to 10 points. Okay. And if they really want to sell, you got a measured move, a big measured move target right there. This range double down. You can also look at it's, you know, month. So let's take a look. So like this high is target right there. 44.86 is target. That high, that day's high. Let's take a look. Hold on. So January, right? That's January low. And that's November low. So we could end up coming down to the November low, which is right there. November low happens to be this day's high. So it looks like we've got a nice confluence area, 44.85-ish. I mean, you got to zoom in because I don't know where I'm putting the line. There you go. It's a little bit off. Okay, so that one and that right there. Bears are trying to close this gap right here, and they could close that gap and pull right into that 85 and 87 area. So that seems to be a magnet, so we could pull back there. So I'll put it there. So 85 and 87. Well, it happens to be 10 point below the 40 point area, the extension. So they could still continue to sell this. But you see how the machines are taking profit immediately right at this conservative measured move target 99.25. If there are no buyers, they could continue to sell. Now, they also broke this demand zone. I don't know if I have it here, but yep. So not this one, but the one that I showed you guys right here. They broke that, but there's a bigger demand zone that I found earlier for you guys. It's also area of interest, but we're also breaking that one as well. So why is it breaking? Well, let's take a look. Well, look what's happening here. Look at that. There is a fair value gap area from here to there. Although they have dipped before, but they could be coming in. Well, why am I doing that? Hold on. There's a tool for it. There you have it. So if they're going to sell, see how this demand zone is working. But if they do want to sell, we could end up coming in here, close that, and then go up. Okay. And that happens to be 95, 97 area, 95, 97 area. See 95, 50, 95, 97. So we could dip right here. But I'm going to go with these. So we have a profit taking bar finally. It could be just a pullback. But again, I'm not expecting a huge bear run today because of this mess. It was not a bull trend. It was not a bear trend. It was up, down, confusion. So this confusion will affect the rest of the day. So don't expect big runs. All right. Have a great day, everyone. Take care, and I'll see you guys next week.